ladies and gentlemen, boys and girls. It is now time for the one and only moneyinfo.com. Brought to you by Princeton Research, where you can find them at princetonresearch.com, no doubt about that. And it's Mike King in Las Vegas, Charles Moskowitz in Boston, Massachusetts. Guys, good morning. Hello, guys.
How are you?
There we go. We got you now. Okay. So what's going on in this world? I know, Michael, last week you were flying.
Just a huge increase in consumer credit. Everybody's spending money. Revolving credit, all types of credit, just has gone up to almost $20 billion for the month of May.
Now, is that good or bad?
19.6. Well, people have confidence.
Okay. That's
certainly never bad.
Yeah. Oh no, not at all. Okay. Well, that's interesting. That hey, if we can all start spending a little bit more money, that is wonderful. So last night, I guess after the market closed, Alcoa made a little bit of news, huh? A lot of new aircraft orders, and their earnings beat the street, guys.
Yeah, their earnings beat, but the top line was a little negative. But it was a better report than a worse report. And that sector, the basic materials sector, needs all the help they can get because that sector has been dragging. You know, the Rio Tintos of the world have been just making new lows. Every country has a major producer of heavy materials, and they're all really dragging.
Well,
Korea has POSCO, Brazil has Vale, we've got U.S. Steel and Alcoa, and they've been struggling. So this was a refreshing report, not an ebullient report, but just something better.
Okay. Well, okay. So nothing to turn cartwheels over, but it's still, a little. We can be a little enthusiastic about it. Now, there was something else that. Let's see. Where did I get this from? It was Fox Business, I think. No, CNBC. I take that back. Apparently, the Indian rupee has been plunging for more than a month now. And so they're somehow blaming our Federal Reserve, and for the easing program that we've had, Mr. Bernanke, and so anyway, that's been a lot of pressure on the rupee, and it is continuing to tumble. So obviously, there's some concerns in India about their own currency.
Yeah, and the fact of the matter is that a declining currency is really good for exports, but India really doesn't have much in the way of physical export as much as it has cheap service-based businesses. And so that's a problem for them.
Okay.
Because they're not shipping a product. I mean, it's not like it's Japan and they're shipping us more Toyotas because their currency is weak and that favors, doing business with them. I mean, I'm sure it does favor doing business there for those services. But, they're no longer, they may have been, to use the expression first to market, they may have had the advantage initially, but, they don't really have it anymore from the standpoint of, there are people who are coming back onshore, in the service side of it, the same way that they're coming back onshore in the manufacturing side, the same way that foreign manufacturers like BMW and, some of the other car companies are, producing here.
Mm-hmm.
It's a different situation when you're a service economy.
That's very interesting. Yeah. Intriguing. Really intriguing. Well, did you guys happen to catch Ron Barron on CNBC yesterday where he's predicting 60,000 60, not 16, but 60,000 with the Dow in 20 years.
Well, that's not so absurd.
That's
if
not
you go
so,
back 20 years, the Dow was, well, you have to go back 30 years, but you go back 30 years, the Dow was under 1,000.
Okay.
It's, 15 times that now.
There you go. Okay. No, actually,
I mean, people get all crazy about this stuff, but the fact of the matter is, as businesses and populations continue to grow, the numbers get bigger all by themselves organically.
right.
Prices go up. Well, prices go up. More people, more demand, same amount of product, except, of course, fortunately now on the oil side, we're looking a little better. But the fact of the matter is that doesn't surprise me. I remember I contributed to a book that was written in 1979 called The Dow Beaters, How to Buy Stocks That Go Up, with a friend of mine who Mike knows also. And the book got panned in Barron's, although in less than a year it had to come up with a revised edition because entire sections of the book had come to fruition. But Barron's panned it because the book called for a 2,000 Dow, and the Dow was only 748 at the time.
Wow.
And they said, this is just absurd.
Uh-huh.
And yet, there we are, and here we are now at 15. The big numbers, 20 years out. My attitude is the same as my attitude about, listening to the weatherman for a 5-day forecast. You got a guy making a 5-day forecast who can't decide what he's having for lunch today. I kind of feel the same way relative to somebody telling us, what's going to be going on, 20 years from now. And frankly, I probably won't be here.
Yeah. I wish you wouldn't mention a 5-day forecast because we're looking at potentially Hurricane Chantal off the Treasure Coast at that time. At that point,
and which way is it supposed to be going?
Actually,
the Gulf or up the coast?
Actually, it's going up the coast. It made a slight turn this morning, which is good. Which means hopefully it'll even miss the Grand Bahama Island and just stay way east of us, which is fine for me.
Not for nothing, but I happen to have a very small position in the reverse oil, and I'd rather see it, even though I'm on the East Coast, I'd rather see it up the East Coast than into the Gulf at this time of the year.
Oh yeah.
Take some of the pressure off the oil, which has been up. Mike's been a big bull on it, and I just haven't gotten behind it. Because technically I think it's at the top of the range, not the bottom. But all of the Egypt stuff, and Mike's been dead right on the oil, and I've been sitting here trying to find a place to short it. But I'd rather see a little bit of the pressure taken off it. I certainly don't want to see big trouble in the Gulf.
Oh, I know. Yeah.
It amazes me. What amazes me about the oil market is it's such a big market, and then you get 18 hours of fog in the Houston Channel,
and
the price of oil goes up $3. I mean, are we really that? You've got to have noticed it.
Yeah,
I mean, it's
sure.
such a big market, and it's so jerked around, with news. I mean, not that I'm saying that the news in Egypt is not insubstantial or inconsequential. It's not. It's big news. But I mean, the Houston Ship Channel gets fog in it for a day and a half, and the price of oil, goes 3%. So I'd rather not add anything to their problems.
That's very interesting, and that's so true. I just look here at the pumps. I mean, it's like, you just think, okay, oil drops maybe $10, and then price goes up here, and I'm thinking, how does that happen? Of course, retail is totally different, but it's amazing.
But we have to look for opportunities, and that's why we brought Target to everybody's attention. Target Energy, which is an Australian company.
Yes.
Trading on the Australian market, TXGE. It's cheaper to buy it on Australia because their currency is so weak. The dollar's been very strong. So all the world currencies are taking their turn to dive, to go down.
Yep.
Let's welcome Casey Quintana.
Oh, Casey
Hey,
is back.
Hello. Hello.
So Casey Quintana over across the way, Tampa Bay. So you survived the television shoot with the supermodel.
Yeah. Yeah, it was a brutal task.
Tough job, but somebody's got to do it, right?
I noticed I didn't get an email with an attachment of the rough cut.
Charles,
I just got them last night.
Yeah, right.
So I've only gone through the first couple, but as soon as they're huge. I got to upload them to YouTube or something. The files are enormous. But I just started going through the roughs last night. This week is National Championship week, so I'm bouncing back and forth between tournaments. So I'm trying to get this done as quickly as I can, but I'll have something to everybody by the end of the week.
Oh,
Great.
yeah, right. Okay. I just wanted a still shot, but that's okay.
Oh, those I have too.
I'll bet you do. So anyway, your commercials will start on ESPN. When's the target? September?
Very soon after we get the final edit, we're going to try to time it with the opening week of the regular season, the NFL.
Oh, there you go. Okay.
So that's our goal date.
That would be the week of the 7th. So yeah, okay. That works. That sounds great. Well, hey, best of luck to you. That's for sure. So, what's happening in your world, in the nutrition world? Anything new there?
We've got the manufacturer is running full bore, getting us some new products. So we have a ship date of August 9th. So within the next 4 to 5 weeks, we'll have good tasting product in hand that makes for either a great pre-workout or an interesting cocktail.
Sounds good. Good stuff. So tell us about, your company in general. I think we've talked about the drinks themselves, but financial stability, all the other stuff here that investors want to know.
We have such a loyal and stable customer base. We're really, really fortunate in that perspective. The average within our industry, because 95% of the product on shelves is it's underdosed and it's just garbage. When you do have a product that performs, people just really stick with it. And we have under 1% attrition rate. So we stopped marketing 2 years ago, and because we had this flavor issue, and we just don't lose any customers. So we're very, very stable. We've got 2 sales outlets that we have signed agreements with that we're going to be at 100% in September. So and our marketing risk with them is zero. They're assuming 100% of the marketing risk. So we're really excited. They believe in the product. They see the low attrition rate. They see the conversion rates, and they're more than willing to take the marketing risk to be part of those numbers.
Sounds good. Well, that sounds great. As a matter of fact, good stuff.
So and then in the pipeline we've got some new products that once we get these new contracts stabilized, we're going to start bringing out a couple of new products we've talked about in the past. One fat loss product with a compound that we have a provisional patent filed on, and then some performance-based. I don't know. I guess you could call them a performance drink, something similar to a Gatorade, but that actually has nutritional value to it.
Without tons of sugar?
It's yeah.
Yes.
The theory behind Gatorade is great. The actual performance behind it, not so much.
Yeah, exactly.
But the taste is great also.
Yeah.
So we're trying to marry the performance with the trying to match the performance with the costing and the taste.
Yeah, I noticed that going to the junior college basketball tournament as I have for the last few years. I guess they did a deal with Coke, so they've got Powerade is their sports drink. So it's virtually the same, though, I presume, right?
Yes.
Okay.
Yeah, they're very, very similar.
Okay. So when are you going to get into that fray?
We have a product formulated. It is with a recovery compound that Dr. Arndt actually discovered and has a full patent filed on, and it's based on a black tea extract that when they did double-blind placebo testing on research on, the results were very good. So we're going to be basing our product on that technology.
So are you looking first of the year or second quarter?
Right now we don't have a timeline on it.
Okay.
I'd hate to throw a date out there.
No, don't do that. Yeah. Okay. But it's in the pipeline somewhere. That's very cool.
It is.
Yeah.
It is.
Well, what kind of a cell phone do you have?
I have an iPhone.
You do have an iPhone. Okay. Charles, what do you have?
Same thing.
Mike, what do you have?
Yeah, the same thing.
Oh, jeez. I'm the only one that has a Droid, I guess. You know what's so weird? In the last 24 hours, you've got all this cell news. HTC is missing estimates because their new HTC One is not selling well. Samsung is being warned about downgrades in Korea because they claim the new Samsung 4 is not selling all that well. Is the iPhone the only thing that's really selling?
Well, it's not that it's the
only
thing that it's not that it's the only thing that's selling, because its numbers were somewhat disappointing.
Yeah, they were down too.
But the issue is, I noticed that there were a couple of downgrades yesterday. Samsung was downgraded by someone and was.
Well, IBM was downgraded.
IBM is downgraded today, but also
imagine where the
Intel
market would be without that.
Yeah,
Intel
really.
and Qualcomm were also downgraded, and the
Wait
issue,
a minute.
it seems, yeah.
How does that happen?
Well, because Intel is trying to get into and secure a strong place in the phone market, and Qualcomm makes the chips for a big percentage, and the weakness is in the upper end smartphones. The sales of smartphones as a group are down across the board. Somebody was talking yesterday. Apple was very secretive, but evidently they're now talking about in September for the refresh that there's going to be a refresh on the 4S and the 5, and there'll be a 5S, and there'll be an entry-level model, so that they're trying to compete, on the not on the low end, but on the intermediate, somewhere between the average and the smartphone.
Mm-hmm.
Maybe the $125 area. You got plenty of stuff for $59 and $69 and $99, and then from there you go up to the $199 area, and then from there, to the big smartphones, it's mostly $249, $299, and $399. Mm-hmm. And you have to remember, worldwide, the cell companies do not subsidize the way we do here.
Oh.
And so, if you want to buy, that's why there's such a big secondary market. When I got my iPhone 5, there was I've seen a website and I've seen ads on TV where if it's working and doesn't have a cracked screen,
they'll buy
etc.,
your old phone
for $300.
Yeah. Oh yeah. Yeah.
Which is all that I paid for it.
Yeah. Yeah.
2 years before or
Right.
18 months before.
Right.
Because outside the U.S., the market is not as heavily subsidized. And so, it's like, I don't know how many there are in the U.S., but just using our sample of 4, 75% of the people have smartphones.
Well, I always carry a briefcase or something, a sports type thing from the Jacksonville Jaguars, which my tablet will fit in. I guarantee you, when we get a tablet that can actually communicate like a phone, my phone is done. I mean, if I can get two for one on that deal, I'm going to go, even if I have to pay for it. I mean, pay a little bit more
and the
for
joke, of course, is, they're talking about larger and larger and larger screens.
Oh yeah, I know. Yeah.
And frankly, I don't watch movies or TV shows on or a lot of videos on my phone. So I'm more than happy with the way that it is. But some of these things are they're really getting big. I mean, clearly it would cost very little for Apple to add, the phone portion into your tablet. And I'm sure that they could do it across, not only them, I'm sure that the Samsung Galaxy would easily be adapted into their tablet. I mean, anybody who has a tablet can make it into a phone.
That's right.
Who would have thought that you'd be willing to take a phone the size of a tablet and use it?
Well, if you're going to be...
But you carry a case.
Right.
There's no way I do that because, I'm wearing a pair of cargo pants shorts and I drop it in my pocket and that's it.
Yeah, yeah.
And that's as big as I want it to be.
Yeah. Okay.
But the move has gone, do you remember the Motorola StarTAC? That was great, and it was small, and small was great.
Mm-hmm.
Now, we're going in the other direction. And I'm assuming we'll go in the other direction again.
Yeah. Wow.
It's like fashion.
Sure.
Everything old is new again.
There you go. Yeah. That's so true. That is so true. Well, Michael, what's happening in the Far East? Korea and Indonesia.
Wasn't there a CPI number this morning, Mike, from China, or last night?
Actually, China showed a whiff of inflation, and that got the gold market going last night. And the gold market had a big $25, $28 rally, and it's just flirting with breaking out to the uptrend, but hasn't done that yet. It's just very close. Gold has put on about $40 the last 2 days, from the lows to kind of a mid-range portion, trading right around 12.58, 12.62 in that area. But speaking of oil, let's welcome Craig Crawford from Texas Gulf Energy.
Hey, Mike King, this is Craig.
Hey, Craig. Hey, Craig. Boy, it has been a while for Texas Gulf Energy. How have things been?
We have been very busy. We've had a lot of opportunity come our way. The company has been taking on new clients and just helping get energy moved from the oil fields to the consumer all over the United States.
And you're busy hiring people, giving them tremendous opportunities. And
that's what we tell them, yes, sir, and that's what we believe is happening. It is a time of huge opportunity in the oil and gas industry in the United States.
Tell us the kind of money that the people can make working in the oil patch.
We're seeing a huge demand for skilled crafts in the midstream and downstream oil and gas industry. And the kind of wages that you're seeing range from $25 to $40 an hour, with 50 and 60-hour work weeks, plus per diem if they're traveling out of town. And most of them are most of the oil production is not conveniently close to your house. It is you got to travel to get to it.
It's such a booming business right now, and you're in Texas, right in the middle of it.
We're in Houston, Texas, which we like to say is the energy capital of the world, and I think it probably is. But there's a lot going on in North Dakota. There's a lot going on in Colorado and Wyoming and Utah and
so
California.
Where are your customers mostly?
You know, we have customers literally all over the United States. We currently have projects in Colorado, North Dakota, Oklahoma, Louisiana, Texas, you know, a majority of them right now in Texas. Even have people in California.
Craig, you had mentioned something about the Rockies, having customers in that area. I remember going back to the 70s, reading stories in the Deseret News in Salt Lake City or in Denver about shale discoveries, you know, in Utah and Colorado and Wyoming and northern Arizona. Is that where you've got your folks placed? I mean, are they actually doing that, or is this just regular oil fields?
Well, we are working in some regular oil fields, but we are also working in what's called the Niobrara Shale expansion, which the Niobrara Shale is one of the huge shale opportunities that spreads from northern Colorado through Wyoming. It's right on the western edge of Nebraska and all the way into Montana and North Dakota.
Really?
Yes.
Now, boy, and what's it called again?
Niobrara, N-O-I-B-R-A-R-A.
Wow, that I've never heard of that. That's amazing.
Yep, look it up.
Yeah, I will. Yeah, that's really incredible.
Yeah, and of course the traditional shale discovery that has been in place in western Colorado is still there, and they're expanding technologies to try to recover the huge reserves there. But there are no big projects going on in that area right now.
Is there any way possible? And I know a lot of this is on federal land. I mean, that's ever going to get eased?
Who knows? Who knows what the federal government's going to do? I mean, there's a lot of demand. The United States is seeing a huge swing in its balance of production versus importation of oil, and it's changing the balance of power in the world. I think the federal government is going to get in line. We just have to be careful and make sure that we do it in a environmentally sensitive and protective way so that our children and grandchildren will have lots of energy and a clean area to work from.
It was interesting. Happened to watch, I think it was CNBC or Fox Business or something, where there was a Democratic representative in Alaska who was talking about opening up Alaska, which I was a little surprised because I didn't think that they were for this project, but obviously that's probably his district, so he was very much tuned into that, and hopefully that would get opened up, which would be great.
Yep. Well, I think Alaska is one of the frontiers for the United States, like this Niobrara Shale. We're discovering new ways, new technologies for recovering difficult pockets of oil and gas, and the cost benefits of that are helping move it very quickly into production. Recently, we had the opportunity to meet with one of the senators, a Democratic senator from Alaska, and talk about oil and gas interests and what was going on and what it takes. And we found him very friendly to the industry. Of course, Alaska is very friendly in that way.
Mm-hmm. Well, that's great. I mean, that's certainly music to Mike King's ears, because I mean he's been preaching. Let's do it here in the United States by 2020. We'll be the kingpin as far as oil in the world, which that could happen. But
so tell us how Texas Gulf Energy impacts the industry.
Well, we think we impact the industry most favorably by providing very, very high-skilled project managers and craftsmen to get these projects executed in a timely and cost-efficient way.
And what type of craftsmen? Like, I know welders is one.
Oh, yeah, welders, pipe fitters, boilermakers, millwrights, all the basic.
What's a millwright?
A millwright does pump alignment and motor alignment, in your process facility so that you can trim the pumps and motors run all the valves and drive the process, and they keep all that aligned and running at the proper speed.
And the problem, I assume the challenge is just finding capable people. This is the challenge, and how do you do that?
It's a challenge. It's a challenge,
yes.
But we have a very significant book of craftsmen that we draw from in the United States, and we continue to work to bring foreign craftsmen in on the guest worker visas, but we have had challenges from the administration not being friendly to guest workers for the last year. So that has not been working as well, so we've had to use more Americans and refocus our Filipino workers outside the United States.
Craig, in a perfect world, how many jobs could you fill if you could do it overnight? I mean, in a perfect world.
How many jobs could we fill overnight in a perfect world? Well, this is actually a slow time. Across the summer is a time when all of the oil and gas companies are doing everything they can to produce oil and refine it and get it to the consumer, because that's the time of the highest demand for refined products.
Oh, okay.
So it's a little bit slower for us across the summer. But even at that, I can tell you that we have opportunities that number in the thousands for craftsmen if we could put them all together tomorrow. And certainly as we go into the fall and winter, there is demand just in the Houston area for an additional 20 or 30,000 craftsmen to complete the projects that are on the boards right now.
Wow. With
major manufacturers and producers.
I think the last time you were on, which was a while ago, you were talking about how much you really enjoyed the work of the veterans who've jumped on board with you. I suppose you're still in that mode that, boy, if you're a veteran out there and just coming back from Afghanistan or Iraq, that come talk to you, huh?
We love veterans. There's a discipline to veterans that helps us get them to work and trained very quickly. They're safe, efficient workers, and we love having them. And we have a huge percentage of veterans in our Corps right now.
So, Craig, this is Charles. I have two questions for you. Number one is, does the change in immigration help or hurt you relative to who can come in and, or is the guest worker program completely aside from that? That's number one. And number two, I think that people would be very interested in understanding how you make money from this, because there's money to be made, and I'm not sure that people understand vis-a-vis the stock how money is actually made by the company.
Yeah, so I can let me answer your two questions. The change in immigration laws, does that help or hurt? It's unclear to us. Right now the way they're changing it, it's pretty hard to tell. They're limiting the number of construction workers in the guest worker program that they have described in the current legislation. So it's just hard for us to judge whether that helps or hurts in terms of bringing in guest workers. How do we make money from all this? We make money by putting together teams, a project management team, including the craftsmen, to go and execute projects for the Exxons, the Tesoros, the Valeros, the enterprise products of the world, and we help them get that done in an efficient, safe way that's cost-effective, and we make our margins based on, we sometimes make bonuses, but we make our margins an hour at a time. We pay our worker, we have a markup on that worker, and we make our markups, and manage the business on those markups.
So it's on the people that contract with you to put together the teams. It's not on the backs of the workers.
Well, we direct hire.
I mean, you're not charging workers to train them.
No, not at all.
Oh, okay. Well, so, I think that there's kind of that misunderstanding, relative to people being involved in the stock and not understanding that, you're clearly not taking advantage of the workers. What you're doing is, you're leveraging the workers and putting together teams for people who contract with you to have those workers provided.
Yes, that's correct.
Good.
We certainly don't take advantage. I mean, the workers love what we do. We help them find work. We help keep them working. We help them maximize their returns, and we make a return. We mark up what we do as we put together the teams for our expertise, for our project management expertise, and we advise clients on how to do that. We get paid to do that, and then we help put teams together to go execute their projects. And that is how we make our money. It generates a very nice margin.
Well,
do you do any work with unions?
No, we are a non-union contractor.
Has there been any resistance from unions with you?
Well, I would say the unions are disappointed that they aren't in some of the oil-producing states, but they are not strong in most of the oil-producing states. So.
Yeah, which mostly happen to be right-to-work states, which I think
I was just going to say
kind of intriguing.
There are a lot of right-to-work states mixed in those oil states.
You bet. Oh, yeah.
Yep.
Yeah.
Yep. Lots of right-to-work states mixed in with the oil states, particularly in the Middle America and the Gulf states. And the other thing we've seen, and I want to make sure I mention to you, is that we have had interest, and we have announced in an 8K that we have a non-binding LOI for the purchase of 2 of our subsidiaries for $5 million. We've announced that. It's in process, in due diligence process right now. We're starting to work on definitive purchase agreements. We believe the transaction's on track to close on or before the 1st of August. But, there's no guarantees we're going to be able to get that. But that will help us leverage. We're optimistic about getting this done. And these are non-core assets. It's going to help us refocus on our core business and make sure we have the working capital to be in the markets where we need to be with the expertise we need going into the future.
Well, that
and what's the
great.
symbol on the stock again, Craig?
TXGE.
Mike, any questions for Craig or Casey? Either one?
Well, I believe there's about 65 million shares outstanding.
65 million, yes, sir.
And it's really been a gem that we haven't heard about for a while. It's been very quiet.
Well, I think, Mike, in our defense, we've been so busy, so focused on our clients, so focused on growing the business, we did not pay attention to getting information out in the market the way we should have. And that's one of the things we're going to focus on going forward, is making sure we're communicating with the market and coming on shows like yours where we get an opportunity to talk to our shareholders and share our excitement about what's going on.
Well, it's certainly a great opportunity. It's the business that's growing the fastest in America. And so your resource is in skilled labor, and it's hard to find them, isn't it?
Yep. Yep. Oh, it is. But we have a great backlog of talent that we believe we can put together with our teams, with our project managers. It helps expand this. And I also want to mention on the side that if the sale closes, the sale of these non-core assets, there will be 15 million shares of stock, of common stock, that will be returned to the company. And that will reduce the total outstanding shares to around 50 million shares. So that'll be good for our shareholders. So we're, that plus the way the market is expanding going into this fall, late summer and fall, being able to focus on our business, on our core business, we believe that it's a huge opportunity for us to get the business where it needs to be. And we appreciate the opportunity from you to let us come on your show and talk about Texas Gulf Energy.
It's a great company, and I see a big upside. I mean, here's a stock trading between 5 and 10 cents that's unique, and I don't know of any other company exactly like it that performs these services. It's like a Manpower specializing in the oil patch, and Manpower is very successful.
Craig, do you have any direct competitors at all?
Well, I'd say that we have a lot of direct competitors. A difference between us and Manpower is we provide the management and supervision, and we're responsible for delivering, efficient construction services to the oil and gas companies. So, yeah, we compete, but the people we compete with are giants. Bechtel, Fluor, KBR. They're giants, and those companies cannot tackle, their downward limit on projects. A $100 million project or $150 million project is very difficult for them to do because of the overheads they have involved in anything they do. Whereas for us, that's a target-rich environment. We love 20 to 50 to $100 million projects. So we can put our craftsmen to work. We can go make, and kind of the secret of our industry is that's where the richest margins are. Whenever you go in those great big projects and you're competing with Fluor and KBR, they compete at very low margins. In the sweet spot that we're in, that we're focused on, we see much, much better margins. Take a look at our financial statements. Look at what our gross margins are from out of our operating units.
It's funny you mentioned that about Bechtel and the bunch out of San Francisco. I mean, I would imagine $100 million project to those guys is coffee money.
That's right. That's right. In fact, when the market is expanding, they won't tackle a $100 million project. They want
it's amazing.
$500 million and above.
Yeah. No, I can see that. Wow, that is truly amazing. Michael, any other questions for Craig?
No, I think we've covered a lot, and I'm really glad to hear from you, and I think the stock is really a great opportunity between 7, 8, 9, 10 cents where it's trading right now. It's really,
the high, I think, back in late January or early February was 16 cents, 17 cents.
Wow.
Yep, it's traded even above that. But we believe we're going to, as we get the market, we're hoping this LOI goes through, that we get the sale done of the non-core assets. That's going to bring cash in. It's going to reduce the number of shares out in the market. We think all of that is going to be good for our shareholders, and we know our business has got a huge opportunity in front of it, and we are leveraged to go take advantage of it.
Boy, good luck. Hey, and don't be a stranger, okay?
You bet. Thank you very much for the opportunity.
You betcha, Craig. Hey, we'll definitely talk to you soon. Craig Crawford, Texas Gulf Energy. And Michael, I remember the first time he was on years ago, and talking about this and trying to do seminars and trying to recruit people to work in the oil patch. And, boy, they've come a long way.
As has the price of oil.
That's true, Charles, yes.
What business is it that has a higher priced product, generally, certainly over the last several years? Let's remember oil was $147 a year and a half ago.
That's right.
For a nanosecond. That of course, that's the oldest economic theory, in the book. Price produces, production.
Sure.
Well, look at the huge numbers that they pay. The minimum is $25 an hour. That's the very lowest level, the lowest on the ladder, 25. and it goes up to $60 an hour, and they have 70, 80 hours a week of work.
Sure.
So, I mean, you're talking tremendous money. I don't think a lot of people realize this opportunity, that the opportunity exists.
Yeah, I think it's phenomenal. I really think it's phenomenal.
And so that's why I bought stock, and I have a Rule 17B, of course, that I've owned stock myself in this company, and am buying stock. I think it's a great opportunity, and I expect that these people will be hiring us as the business matures to represent them. And I think it's unique. And if you look at stocks in the employment business, like Manpower, they're doing very well. So I don't see why this company shouldn't do very well.
Mm-hmm.
And I don't see why the stock shouldn't go from 5-10 cents to 25-30 cents.
What was their? Do you know what their revenues were for last year, Mike, by chance? About?
No, I'm not sure, but I can.
Because it seems like the stock is selling at a very low price to revenues. I mean, the company is only market cap at it.
In the last year they did $35 million.
And and that's about what the entire market cap is for the company, with 65 million shares outstanding at a nickel.
Yeah.
So the company is selling, for a valuation basis, selling for 1 times revenue. I mean, that's very cheap.
Yeah. Oh, yeah. Wow. That's amazing. Well, guys, how do we get the newsletter?
Just call me at 702-650-3000 or send an email to Mike at PrincetonResearch.com. And it's easy to get.
Yep. And Charles, the text service, which is attached
Very
to the
easy.
email.
You text the word updates, UPDATES, updates to 69302. And I want to remind everyone that we have our 10 o'clock conference call tomorrow. And anybody is welcome with questions about their own portfolio or, positions that we have had or still have in the options only or in the big account. And the conference call number there is 712-432-0075, and the access code, the PIN number, is 614426. And we.
What was that again?
The dial-in number is 712-432-0075, and the participant access code is 614426. And that starts at 10 o'clock and goes on until it goes on.
And, folks, if you're out there driving and you heard all those numbers, we've got them here at the station, so don't worry about it. And you'll hear commercials on, obviously, the newsletter and the texting service and the new conference call that those spots began yesterday. So, yeah, the very, very good stuff. Very good stuff. It looks we just have about 4 minutes. A couple quick things. The FDIC is going to do it again to the banks, huh? Requiring 5% of the assets. Here we go again.
This is very disappointing because, all of the legislation that we've had besides this, all of the Dodd-Frank, all of this stuff puts our banks at a very marked disadvantage around the world.
Exactly.
And so, it's the reason why, even though a lot of the bank stocks have done remarkably well, the B of A's up from, $4 to $13, you have to remember that's still down from $40. And the reason is that, we have saddled these banks with the need for much, much more in the way of capital. Not that in and of itself is necessarily a bad thing, but we've hamstrung them to not be able to participate in things that made a lot of money, so they're making less money and they're less leveraged, and that's why they're where they are. That's why they're not. Another one, City. City at $40 or $50 looks terrific, except that it's a reverse split, 1 for 10. So we're talking about $4 or $5 down from $35. So it's very disappointing that we continue to do this. This is I can't believe that that the legislators haven't learned that you can't legislate away problems. It's just like terrorism. And if you can't imagine it, you can't protect against it, and that's where the problems come in. The same thing in in the financial markets. If you can't think that there could be a product like a CDO, then you can't legislate against it until the horse is out of the barn. Mm-hmm. So it's just amazing that they still haven't gotten that you can't legislate honesty and you can't legislate good sense, and yet they continue to try and disadvantage us.
Michael and Charles, what does this mean where it says New York Stock Exchange parent Euronext has been chosen by the UK to become the new administrator of the London Interbank
LIBOR
offered rate?
Right.
Okay. Oh, okay.
It means that Euronext is taking it out of the hands of the group of banks who set it. You have to realize they don't have a Fed like we do, who say that the Fed rate is 0.25%, or the Fed's raising the rate from 0.75% to 1%, or 2.5 to 2.3, 2.5. They don't have that. They let a group of banks. It's the same way Manpower does their numbers. They come out, they make calls, they find out what people are thinking, and then they put something out. Same thing with LIBOR. They, went to the participating banks, asked them what their rate was, and then blended it and said, this is the rate. So now they're putting it in the hands of Euronext.
Wow, interesting stuff. Well, guys, we will be talking next week. Charles will be... good luck on the conference call tomorrow.
Next week we'll have Hecla as a guest.
Great.
Hecla Mining.
Okay. We'll talk a little bit about silver, huh?
Tell us about silver and gold, some of the problems that they've had.
Okay. All right. Michael, have a good week, okay? Mike King in Las Vegas, Charles Moskowitz in Boston, Casey Quintana in Tampa Bay. Boy, what a brain trust, huh? Whew. Money Info brought to you by Princeton Research. Just go to princetonresearch.com, get that newsletter, and don't forget the texting service with Charles, and don't forget his conference call. We're expanding out on Wednesdays. Dial it up. WPSL, Port St. Lucie.